Hey everyone, and welcome to Vietnam Holdings Investor Presentation. At this time, all participants are in listen-only mode. Later, we will conduct a question and answer session through the phone lines, and instructions will follow at that time. Alternatively, participants can submit written questions using the Ask a Question button on the webcast page. I would like to remind everyone that this call is being recorded. I will now hand over to Craig Martin, Executive Chairman of Diamond Capital, to open the presentation. Craig, please go ahead.
Thank you very much, and a very good morning to you. I hope it's not too cold wherever you're dialing in from. And we appreciate you joining us when there's a little over 12 days or 12 sleeps till Christmas. So thank you very much. I'm Craig Martin, and I'm the Chairman of Diamond Capital. And it's my pleasure to introduce our webinar this morning for you. I'm also joined with my colleagues, Tin, the CIO and CEO of Diamond Capital, and also Tan, one of our portfolio managers. And today we'll talk a little bit about where Vietnam's at, where the portfolio's at, but also we want to spend some time talking about the upcoming AGM and EGM. Next slide. The disclaimers, you can run those through ChatGPT. I think you'll be very familiar with those. Next slide. Well, it's been a very eventful year globally, of course, and Vietnam's been no exception. And for us, it's been a tremendous year. We were delighted in November to be awarded the Best Emerging Market Single Country Trust Award by Citywire. And they look at all emerging market single country funds like ourselves, but globally, and judge performance on various measures: information disclosure levels, growth in net asset value over 3 years, and also total shareholder return over 3 years. And so we came top. So we're very proud of that. And my colleague Tan was in London to collect that award. And it's very nice to have some silver in the trophy cabinet. Next slide. Well, for those perhaps familiar, or perhaps those also not familiar, a summary of who we are and what we do. We're a nimble fund manager. We're pleased to have been able to demonstrate the outperformance that we received the Citywire Award for, but actually the outperformance goes back 10 years, and we've outperformed against the Vietnam All Share Index over 1, 3, 5, and 10 years by being an active manager, investing across the size opportunity set in Vietnam, but being very selective. We run a concentrated portfolio of 26, 27 positions. We don't hold any gearing. We're conviction-led, and we can hold up to 15% at entry point in terms of our largest holding. And our thematic exposure really falls out of the core investment themes in Vietnam that we'll touch on. We're also always pleased to announce that we get good scores when it comes to responsible investing, which we've been at the forefront of for a number of years, as well as tracking over several years now our carbon footprint. The board of the fund is listed on the main board of the London Stock Exchange, and the board of the fund are very active in also helping to address the discount to net asset value that pretty much all closed-end funds suffer from. And that's been through a combination of share buybacks, historically tenders, and importantly, the announcement for the AGM on the 21st of December and for the EGM, a very novel and innovative annual redemption facility has been put forward. And we'll talk a little bit more on that. But when we talk to investors, as we do regularly, and we enjoy talking to investors, one of the observations that comes out, if people are interested in Vietnam and they see that having a very dedicated team managing a focused strategy on Vietnam is appealing and a single country fund is appealing, is people say, well, you're small. We're under 100 million pounds of market cap. But we don't think that bigger is necessarily better. So our size enables us to be nimble, and we make decisions in a very focused and fast manner, and a very consistent performance. And actually, there are two other funds listed on the London Stock Exchange that invest in Vietnam, and they're much bigger. And is bigger better? Well, not in terms of performance. So in the year to 30th of November this year, Vietnam Holding has been up about 18% in terms of its net asset value. There's another fund which is 9 times our size. It's up about 10%. So we've outperformed that fund by about 800 basis points. And then there's another fund which is probably 13 times our size, and its performance is about 7%. So we've outperformed that more than 1,000 basis points. Another criticism at times is, well, you know, the bigger funds should have a smaller discount to NAV, and that's not necessarily the case. So I think we can demonstrate that through the active activity of the board and the buybacks and how we've positioned the fund, Vietnam Holding has the narrowest discount of the 3 Vietnam listed funds. Our discount today is about 8% to net asset value. The 2 larger funds, their discount is around about 19%. So size isn't everything. One other point, though, is about liquidity. And that there's a genuine point there that, you know, maybe a larger fund has more liquidity. But the board is aware of that. And that's one of the reasons that they've put forward the proposal to shareholders to have an annual redemption facility close to NAV. So that actually creates a greater liquidity opportunity for investors. So size isn't everything, but performance is. Next slide. So our performance is by doing simple things well. If we have to put us in a category, it would be growth at a reasonable price. So we try to find well-managed businesses, simple to understand, good visibility on their balance sheets and cash flow, good management teams, good commitment to following us on our journey as being a responsible investor, and we'll touch on that a little bit later. But looking at good earnings growth. So our portfolio forecast for 2024 is an earnings per share growth of about 30%, and yet on a very reasonable valuation of about 9 times price earnings. So that's good value at a good growth level underlying that portfolio. Next slide. So today, I'll talk a little bit about the position of Vietnam today. It may be familiar to many, but perhaps less so for others. My colleague Tam will talk about the equity market, how we choose to express our views on the Vietnam opportunity and what's happening in the equity market. We'll then talk about our portfolio, our approach, what's in the portfolio, what we're excited by, why we have companies at certain levels of conviction. We'll then touch briefly again on us as a fund manager in terms of our approach as a responsible investor in Vietnam, and then conclude by just highlighting the upcoming AGM and EGM, which is very important. Every 5 years, there's a continuation vote, so that falls on the 21st of December this year, so next week. And then there is also an EGM, and that's to put forward a very, as I say, an innovative annual redemption opportunity for investors. And so there'll then be plenty of time for Q&A. Next slide. So Vietnam remains an attractive opportunity, a large, young, digitally connected, highly literate population, a country that values education. It scores very well on PISA scores, and its education system has been lauded in the international community for a number of years. It's got a low but increasing urbanization rate that provides tremendous opportunities for us. It has attracted high levels of foreign direct investment, and that's driven its GDP growth more than 6.5% over the last 30 years. So 6.5% per year, every year on average over the last 30 years. And it's been a very open economy. So it trades with everyone. And you know, the key export sectors in the bottom, they've been historically important for Vietnam for many years. And Vietnam has cemented its position as a made in Vietnam story. Uniqlo, my favorite go-to underwear and vests and shirts. Between 20 to 30% of the world's exports of Uniqlo products come from Vietnam. If you're a Nike or an Adidas fan, then 50% of the running shoes are made in Vietnam. But it's not just garments and textiles and running shoes and apparel. It's also increasingly high tech. So Intel has a large factory. It's the largest in the world in terms of assembly and test for semiconductors. NVIDIA and other players are also looking more at the AI and also the semiconductor ecosystem in Vietnam. So Vietnam's trying to move up the value added. It's a significant producer of laptops, mobile phones, smart devices, Apple components, and it's continuing this strong manufacturing for export story. Next slide. So over the last 30 years, look at the high, stable GDP growth, which is remarkable, as Vietnam entered into an open door policy, Doi Moi policy of allowing international trade. And that has driven the growth in the per capita GDP to what we've referred to in the past as an inflection point. And we've observed that other markets such as Thailand and China, when they've got to this level of per capita GDP, they've seen their GDP accelerate in a kind of S-curve. And so we're at the inflection point on that S-curve. And that means we're going to see increased demand and opportunity for consumer goods products, wealth products, and other such things in Vietnam. Next slide. I mentioned that the population is large. It's also very hardworking, a very hardworking mindset, and also a long kind of golden demographic dividend, which should last for a number of years more, which is the envy of much of Asia in terms of its population size and its young demographic, its hardworking population. So it's attracting a lot of manufacturing, and its manufacturing cost is still a fraction of China's and a fraction of Mexico's. Next slide. So that open economy, we can't take that for granted. It's a two-way street, though, of course. So Vietnam's import and exports account for almost 200% of GDP. And Vietnam has built this raft of free trade agreements, both bilateral and multilateral, and has built this well-diversified group of trading partners. And so Vietnam has become a very important sector for manufacturing for export, a hub, a global hub, which is referred to as Made in Vietnam. And yet Vietnam has managed to position itself well in being a friend to all, but a servant to none. And very interesting, Xi Jinping is in Vietnam this week, and President Biden was in Vietnam the other month. So Vietnam's the only country this year that has had both Biden and Xi Jinping visit. So I think that shows the growing importance of Vietnam and its strategic location in global trade as a manufacturing destination. Important for America, it's important for China. And Xi Jinping and the Vietnamese government have said they want to look at a shared future. They share a border in the north of the country, and they share an ocean, East Asian Sea or the South China Sea, the Chinese refer to it. But most importantly, they have some shared cultural heritage, and they'll be trading partners and diplomatic partners for more than 70 years. And they want to have a shared future. So I think that that's been a very positive visit so far this week. Next slide. So a lot of the investment into Vietnam, the foreign direct investment, is going into manufacturing for the made in Vietnam, for the export of goods and services globally. And despite the fact this has been a difficult year globally, Vietnam's had almost record levels of foreign direct investment into the country. So it's attracting interest in high tech, in renewable energies, in people looking to build and expand their factories in Vietnam. As this narrative of China +1 or China +2, and as I think the EU are referring to people looking to de-risk their supply chains. And so Vietnam is a very good place to move your manufacturing or some of your manufacturing to. Next slide. And so you look over the last 16 years how manufacturing output as a percentage of GDP has grown, but then also look at that chart on the right-hand side. It's kind of like half of a normal curve. You're seeing the dramatic increase over the last 30 years in exports, when I first visited Vietnam more than 30 years ago, even then, I was impressed that Vietnam had great potential for exports. And I wrote to my mother that I thought Vietnam would be the next, it could be a next Asian tiger. Well, Vietnam has developed far beyond my wildest dreams in terms of its export potential and its size across many categories. Next slide. And interestingly, geopolitics does affect everyone, including Vietnam. And Vietnam's seen its share of exports to the US increase over the last 5 years. And that's been partly driven by the US and the US trade wars and trade tirades of a few years ago. And then it's been accelerated by COVID, and then more recently, people looking to shorten and nearshore and friendshore their supply chains. And the US, reason Biden came to Vietnam, was to ask Vietnam to make it a strategic partner, to put it on the same level as China, which Vietnam has done. And so I think we'll see continued and furthering growth in exports from Vietnam to China over the years to come. Next slide. So what does that mean for the average Vietnamese person? Well, their life is changing dramatically, and the consumer market in Vietnam has changed very significantly over the last 20 and 30 years. And it's got a long way to go from that inflection point. So by the end of this decade, could be another 35 million more consumers. And that's accessing services, products, and goods. And so that creates both a vibrant domestic economy, which acts as a second pillar alongside the manufacturing for export story. And Vietnam's e-commerce and internet economy is growing at a rapid rate. And that's going to be a very significant transformation for Vietnam's digital economy and retail economy going forward. Next slide. And that means more modern trade. And we've seen in other parts of Asia how that plays out, and Vietnam's going to be no exception. Next slide. Urbanization, we've spoken to in webinars in the past. Vietnam's level at 39%, it's creeping up. Last year it was about 38%, the year before 37%. But it's on a path that will follow what's happened in other parts of the world. So China was at this level 20 years ago, at the turn of the millennium, and then doubled in 20 years. So although Vietnam's had a very difficult 18 months in its domestic real estate market, there will be the need for millions of more homes and houses in Vietnam. So urbanization will increase. And the investments to make that urbanization happen in terms of infrastructure will have a multiplier effect on economic growth. You get more economies of scale, greater labor pooling as the cities get bigger. So that also drives the modern retail trend, and it makes the economy more efficient. So that's something to keep a very close eye on in the future. Next slide. And so the urbanization rate is still low compared to the rest of Asia. Look, Thailand's 53%, China 64%, Malaysia 78%, but a high level of growth. Next slide. So in conclusion, on the macro, it's all good. Well, it's very positive on key fronts. So inflation's under control. The government's been cutting interest rates since the early part of this year. And the currency, the Vietnam dong, although over 30 years it's been on a declining trend against the US dollar, over the last few years it's been quite stable, has weakened during the year, particularly as the US dollar has been so strong. But as the US dollar perhaps weakens a little bit, you can see that the currency is actually relatively stable, much more stable than the yen, for example. Everyone's going to Japan for their Christmas shopping. Next slide. So I'll hand over to Tan, who will talk us through the Vietnam equity market. Thank you, Tan.
Yeah, thank you, Craig, for the introduction. Next slide. Yes, after years of many challenges, especially for the challenges of the tightening condition globally and also locally in 22. And also in the first half of 23, but the equity market of Vietnam strongly recovered year to date, and it's already recovered by about 15% from the level of at the end of 22. And now the valuation of the whole market is now back, is now below to the long-term level, just about 14 times of trailing earnings. It is worth noting that the earning growth of 2023, despite many challenges, still not negative. Yeah, and we expect that the earning growth for 24 is about 15%, based on the assumption that the export growth of Vietnam would be more positive, and the normalization of the domestic consumption, especially because of the stronger recovery of the tourism sector, and also the effect of the investment of the public investment, and also the sustainable FDI flow into Vietnam, about more than $40 billion inflow, would have ripple effect going forward from 2024. Yeah. Next slide. Yes, and the profitability of the equity market of Vietnam would be back to the normal level of about 12% to 15% return on equity, and compared to its peers in the region, the equity market of Vietnam is still very attractive for the growth, for the long-term growth. Next slide. Aside from the fundamental long-term factors, we also would like to mention the midterm technical factors for the equity, for the re-rating possible for the Vietnam equity market. At the moment, Vietnam is still classified as frontier market. However, it is already the biggest component in the MSCI Frontier Market Index. And Vietnam is on the roadmap to be included in the MSCI emerging market, which could be a catalyst for Vietnam to be re-rated in the midterm. Next slide. There's a number of key impediments that the government has been solved to have Vietnam be included in the MSCI emerging market, including the foreign ownership limit, the improvement of the market infrastructure, and also the better transparency of listed companies, and the liberalization of the currency market. In the short term, the government is now focusing on the market infrastructure improvement, and the new trading system of the market, of the equity market, would be put into operation expectedly the first quarter of next year, and would be the strong platform for Vietnam to be included in the MSCI emerging market. And we expect that would happen around 2026, when there's a more important key impediment, the liberalization of the currency market, would be solved after more improvement of the legal framework for Vietnam. Next slide. Yes, and just like Craig already mentioned, the picture of the foundation of the macro picture of Vietnam in 23, we would go to Vietnam to 2024 with a better picture of the macroeconomics. And we expect that the GDP growth for Vietnam would be about 6.5%, and the export growth would be more positive in 2024. Yeah, this is the summary of the equity market development of Vietnam in 23. And I would like to hand over to Mr. Thịnh, the CIO of the Đài Nam, to talk more about the portfolio of Vietnam Holding.
Thank you, Thanh. Please go to the next slide. Yeah, next, please. At Đài Nam Capital, from very beginning that we follow a fundamental investment philosophy, research-driven, long only to invest in growth stock with reasonable price. The local team of sector specialists carry extensive analysis to pick up a good company that are generating more than 20% earnings per share growth with reasonable valuation. We also integrate ESG dimensions into our investment process and conduct an active engagement program with our investees. We carry out company visits, talk with management, talk with their supplier, their distributor, and even their competitors for not only the business and financial results, but also the ESG matters. We also follow a disciplined portfolio construction process based on the degree of conviction and make proper rebalancing activities based on macroeconomic factors, company and sector specific trends and events. Next, please. Next slide, please. As mentioned by Greg, that we see the key drivers for Vietnam to grow more in the future include industrialization, domestic consumption, and urbanization. And our portfolio reflects our belief in those growth mega trends. Next, please. Please have a look at the top 10 holdings in our portfolio. You can see that we have a concentrated portfolio with more than 60% of portfolio in the top 10. We selected some good banks, but generally we underweight banking sector this year. We also have industrial parks, developers, but we underweight real estate sectors. We overweight the telecommunication, industrialization, goods and services, and retail sectors. In the top holding that a company named FPT, it operates in the IT business and telecommunication, have very good achievement with 19% earning growth in the first 11 months of this year, following a growth of 21% earning growth last year. The second holding is a bank named Sacombank. The bank nearly completes its restructuring process to clean its legacy bad debt and improve its net income margin. The bank made 48% earning growth last year, and in the first 9 months of this year, that made 54% earning growth. We expect that the next year the bank will continue to deliver a good return. Another company named Jamadat, number 6 in our portfolio, also have very good attribution to our performance. The company is in port operations and also logistic business. And last year that the company made a very good earning per share growth of 63% in 2021, 60% in 2022. And this year we expect that the profit also will grow more than 100%. That's the company that we believe that is very good proxy to the Vietnam manufacturing and exporting story. Next, please. We have highly active weight with a medium cap of 1.1 billion US dollar. Many companies in our portfolio used to be a mid cap one with a size of about 200-300 million US dollar as market cap, but grew very well in the last few years and became a larger company with a market size of more than 1 billion US. Next, please. Next slide, please. We had a very strong performance record over the last 10 years. We show a low correlation to broader emerging and frontier market. The table illustrates what Greg already mentioned, that we outperform 1 year, 3 year, 5 year, and 10 year in comparison with Vietnam Own Share Index, MSCI Emerging Market, and also FTSE Own Shares. I would like to hand over it to Greg to continue the presentation, please.
Thank you, Tin. Next slide. Next slide. So just as a quick recap, myself and Tim, we don't have Tan's picture there because he makes us look old, but we're experienced, and both Tim and myself have a private equity background, and so we take a private equity approach to the public markets that we're in. Next slide. Tim co-founded the Vietnam Institute of Directors and is a leading voice in good governance, responsible investing. And so we use ESG as an integrated part of our business. So we're just concluding around Dynam Capital and how we're well placed as a key exponent of the responsible investing. And that's to serve our selfish needs. It's to manage our risk. It's to help us identify great companies that have the ability to compound their earnings. And those companies will get better re-rated in the future. Next slide. Next slide. So one of the highlights of this year is that there's every 5 years, there's a continuation vote for Vietnam Holding. That voted at the AGM on the 21st of December. So in addition to the regular agenda items, approval of accounts and changes to the boards or appointments of auditors, etc., there will be the renewal of the share buyback mandate, which is currently in place. The board can buy up to 14.99% of the ordinary shares. And most importantly, there'll be the continuation resolution. So we hope people will vote for continuation so we can continue to do what we're doing, which is deliver strong outperformance by doing simple things well as an investment manager. Linked in to the continuation resolution, there will be an EGM, an extraordinary general meeting, held on the same day, 21st of December. And the key point of that EGM is to introduce a novel annual redemption facility. The background to this is that the board, for the last 5 years, with our help as a manager, we've been positioning and marketing the fund, telling people about Vietnam and our performance. We've also been trying to make sure that there's good information disclosure through the website, through social media, through webinars such as this. But also the board has been doing share buybacks on a regular basis, and every few years, tenders close to NAV. And that's one of the reasons why the discount to NAV is the lowest of the 3 London-listed funds. But there's still a discount. It's about 8% today. And it's hoped that with this annual redemption facility, we may see the discount narrow further. We may even see the discount disappear. That would be tremendous, because if it disappeared, we could issue more shares. But I think this is a great opportunity for shareholders. It means that if you've held shares for more than 2 years, you can redeem without any charge on redemption. If it's between 1 and 2 years, there is a charge of 2%. And if it's under 1 year, it's a charge of 3%. But it means that on an annual basis, every year, starting next September 30th, 2024, if you wish, you can redeem some or all of your shares in Vietnam Holding. And we think this will provide good confidence and comfort to investors that there is liquidity in a fund such as Vietnam Holding. Obviously, we want people to stay and continue us for the journey, but having this redemption facility in place, if it's approved by shareholders at the EGM, we think we'll have a great chance of keeping the discount narrow and, say, hopefully, with a fair wind, removing the discount. So there will be annual opportunities, and the first will be on the 30th of September next year. And so that through your custodian or through however you're keeping your shares, there'll be information on how you elect to partake if you wanted to redeem some of your shares. So these are both very important points at the AGM. Vote for continuation, please. And also the extraordinary general meeting to vote for the redemption facility, which I think is in shareholders' interest. Like it's very novel, it's very innovative, and it provides another important differentiation of Vietnam Holding. Not only are we an outperforming fund in terms of our NAV per share and our focus, but we're also delivering on mechanisms to narrow and reduce the discount to NAV to address the criticism that people might say, oh, small funds hard to sell, hard to buy, liquidity is low. So hopefully this helps address that. So two very important proposals that are being tabled next week. So your shareholder, your custodian or the platform that you hold your shares through should be contacting you. If not, contact them. Don't contact us, but contact your custodian or your broker, such that you can, if you wish to vote, and we encourage you to, you can submit those votes electronically. So with that, we'll go to Q&A. And again, with apologies for the breakdown in telco earlier, hopefully we can address your questions and answers. And if there are questions that we don't have the ability or time to answer immediately, we'll address those that we can and publish those through the platform. So I'm happy to go to any Q&A.
Thank you. At this time, there are no questions on the conference call lines. I will hand back over to Craig Martin to address the written questions received via the Spark Live webcasting page.
Thank you. Two questions. One about China, unsurprisingly, and then one about the redemption facility. So we get a lot of questions about China and Vietnam's relationship with China. As I mentioned in the call, I'll answer this question that over the past 70 years, Vietnam and China have continued to develop and enhance their relationships, both through diplomatic means and also through trade. And China is a very important trading partner for Vietnam. Vietnam exports a lot of fruit and vegetables and other products across the border to China and via sea as well and via plane. And also China exports components, raw materials, some semi-finished goods as well. And having Xi Jinping visit is very important. And it's been called bamboo diplomacy. So China and Vietnam have two similar kind of conservative socio-political structures. They both have a communist party, which can talk to each other as well as G to G. So I think it's a very positive thing, and recognizing, the changing geopolitics. And as we mentioned during the call, to have Biden and Xi Jinping visit, that's a great feather in Vietnam's cap. And Vietnam is also looking at extending its relationships with China in trade. And we expect there to be many kind of deals and things announced over these couple of days. Then there's a question about the redemption, about the EGM. So just again to highlight, it's important that people vote because if the redemption facility isn't approved by shareholders at the EGM, it won't happen. And if the continuation vote doesn't get approved by shareholders, it won't happen either. And then the plan B, the board will come back to shareholders on that. So we seek shareholder support on that. And then the redemption, it's something for you to work with, say, your broker or your custodian. If you've held your shares in Vietnam Holding for more than 2 years, then there's no redemption charge. If you've held it between 1 and 2 years, there's a 2% redemption charge, which doesn't go to us. Dynamic goes to the fund, the remaining investors. So it's accretive on an NAV per share basis. And if you've held the shares for under a year and you want to redeem out, then there's a 3% charge. You don't need to redeem. And obviously, we hope that many will continue to join Tin and Tan and myself and the rest of the team and the board of Vietnam Holding on the journey going forward around that. So obviously, next September is a long time away, so there'll be more information from your platform, probably obviously prior to that, and probably some announcements during the course of next year around that, coming up to that first redemption point there. But I think it's unique. So it's a closed-end fund, but it means that there's an opportunity for investors, if they need liquidity, that it's there and it's available for them. There's a question about outlook for next year. Next year is the year of the dragon in the lunar cycle, so it's an important year. And we see, as Tan alluded to, strong earnings per share growth for next year at a reasonable level of valuation. And Tin, during his presentation, I think, spoke about the different sectors, how we express the investment themes in terms of our portfolio construction. So we like to back our winners. So FPT, close to 15% of portfolio, a very strong compounder. And there's some familiar names in the top 10 if people have been watching us for some time. And there may be some old friends coming back into our top 10. So we are nimble, and with, at times we choose to go slightly underweight when conditions are not favorable for a particular sector. That doesn't mean we don't like the sector full stop. It just means we've got better opportunities in the portfolio. And there's another question about dividend. Do we pay a dividend? Well, we don't. Historically, there haven't been dividends paid. That's not to say there wouldn't be in the future, but there haven't been historically. And dividends that we receive, the portfolio generates about a 2% dividend yield that's reinvested into the fund. And also historically, we've done share buybacks. The board have authorized share buybacks. And so that's been kind of like a quasi-dividend. Some money from the fund being used to buy shares at a discount and cancel those shares. That's accretive on a net asset value per share basis. And obviously with the redemption facility, if it's approved, then there might not need to be so many share buybacks. Time will tell on that. So I think they're the questions we have. Thank you for everyone that's sent in questions. Feel free to reach out to us if you have other questions. And if there are any other questions that come in later through the platform, we'll make sure those are addressed. So that's the end of the Q&A. So perhaps to conclude, if I may, a couple of things. One is we thank investors for backing us and trusting us. Vietnam Holding has continued to show its strong outperformance over 1, 3, 5, and 10 years. And hopefully we've been able to explain why that is. Partly it's our nimbleness and it's our focus around that. And big is not necessarily best, but performance counts a lot. And we're very pleased with our performance. We're outperforming the market, we're outperforming our peers. And also we have the lowest discount, which again, we hope to see further reduced over time. So that brings us to the end of our webinar. It's for us at Dynam to wish you all a very safe and Merry Christmas and a Happy New Year when it comes, and season's greetings to all of you that may be celebrating. And we look forward to being in touch with you, and we look forward to positive results at our AGM and EGM next week. And we'll be in touch again. So thank you very much on behalf of Dynam. Bye-bye.
Thank you.
Thank you.